Hey everyone, thank you so much for joining the Behind Company Lines podcast. Today we have Layne Nadeau, founder and CEO of nValves, a B2B company producing fair market value NFT price and market analytics data for regulated or any companies and platforms. Layne, I'm so excited to chat with you and get to know you a little bit more and talk about what you're building, especially in the space that you're building. Coming from a very traditional financial background, I think offers a really cool perspective and especially in a kind of a wild west of an industry right now. And it's going to be exciting to chat with you about not only, the experience that you bring into it, but kind of how you view the market. But before we get into all of that, what were you doing before you started nVal?
Hey, great to be here, Julian. Really excited to dive in. I'm always excited to talk, frankly. So I spent about 18 years delivering enterprise software, primarily as a consultant, most of that time running my own business. I have a computer science degree, but I ended up on sort of the project management delivery side. So I was a business analyst first, which really was what problem are we solving and how does technology solve that problem? And then I just became this sort of expert in execution of projects. So that carried me all the way through up until a few years ago. About the last 5 years of that have been working with institutional finance. So some pretty big banks and institutional players, one of which was about 300 billion AUM and ran all major asset classes. And so I ran projects from front office all the way back to the Swift network and public disclosures and a book of record system change out, which was, one project alone is $76 million kind of thing. So pretty sizable stuff, but got that front row seat to the financial industry. And that really, when I then saw the blockchain tech stack, was just blown away. It's like, this is so obvious. Of course.
Yes. I love that, man. And it sounds like you're incorporating so many different, not only aspects of the financial institutions and what they have to do within the project basis, but how do you kind of manage or figure out what to focus on and then gain the knowledge that you have? I mean, it sounds like, or I guess the question is, when you're faced with a project, do you kind of know what you're getting into? Or when you break into it, are there new things that you need to learn and kind of adapt to along the way?
Yeah. So projects, the ultimate deliverable part of it, that's about the only part that is sort of consistent and repeatable. Then what ends up happening is it's the same principles, the same concepts, but very different because your ecosystem has changed. Even if you're changing the same CRM software in one organization, and then you go to another organization, everything around that single point that's the same is so different that the project delivery is just vastly different. And so somebody who really recognizes the concepts at play and the principles at play. So everything from, stakeholder management to requirements to just the dev cycle itself, you really have to understand that at a really high level so that when you see it in a completely new context, it still makes sense because it's very different. It looks very different. You can't just sort of take a cookie cutter approach. And I had some clients I talked to and, they said, oh, well, over here from, one of the big four consulting firms says they have a plan in place. They can tell us exactly how this is going to go. And I did tell one client who ultimately hired me, I said, anybody who tells you how they know how this is going to go at the outset is lying.
Yeah.
Like, what I know is how to get there. And the short version is you only know maybe this much at the outset. And then right when you finish the project, just when it's all done, that's when you know everything.
Yeah. What are some of the key variables that you look at, or I guess, what are some of the most important structures of a business that you look at to then identify what, software or system that you need to implement? If, once you dive into it, you don't know a lot, but what do you go to, I'm sure, in terms of gathering information to kind of start setting the pieces into what then, eventually becomes the end result?
Yeah. So primarily it becomes the problem that needs to be solved and like the pain point or the problem and the motivation. So motivation and these two things, if you go into the enterprise world, this stuff appears in a business case. So we have a pain point. We can't do something we do costs too much. Our technology is out of date and therefore it's risky or costs too much. So we have this pain point. And then the opportunity or the motivation is, are we going to save money? Are we going to be able to keep doing our jobs? Or are we going to reduce risk? Those sort of things. And then you take it sort of one step further down into the detail and you really start to look at what are the real pain points? Is it that our infrastructure doesn't work? Is it that our users aren't getting the tool they need anymore because our business has improved or shifted or changed? And then on the motivation side, it's like which people, which users, which customers, ultimately, if you're in sort of startup land, who has this pain point and who doesn't, and who's impacted and maybe doesn't stand to benefit, but they have a big impact. Like if you're the sales team and you're just punching things over the fence and then somebody else has to do something, if they change how they receive stuff and you have to do a bunch of changes, but it doesn't actually benefit you, you have to sort of speak their language, if you will, or at least find a common ground as to like, why is this in your interest? And that's not for everyone. That's, not everybody is excited. It has to do work that ultimately doesn't make their day any better. And so finding that motivation and figuring out how to wrangle people, that is honestly the very first few steps, months, even in some of these big projects, is figure out who's at play and what is their interest in this.
Yeah. Are there a couple of go-to questions or principles or structure that you use that has been reliable in terms of gathering that information, that motivation for clients that you've worked with?
It is. I mean, so I used to start, back up for a second. We used to start engagements, sometimes actually writing the business case. And if I'm starting that early, I really start with who called me in, who has a pain point, and then just keep asking these probing questions. And it all boils down to like, tell me more about this. They'll just keep going and going and telling sort of why this pain point exists, how it manifests. You ask, who does this affect? And so you really uncover what is it that doesn't work right now that we need to make better or fix. And then you just start asking, those peripheral questions of who does this affect? Who does this impact? And then you go to sort of upstream and downstream and you say, well, where did that data or record or process initiate? Like, how did it come to you? And then you look upstream and you're like, oh, well, the private equity floor started this. And now it comes down to back office who is dealing with, the other side. And then eventually book of record is the one that receives this. And so you get you end up building lists of stakeholder and of high level requirements or pain points. And then, you take all of that if you're doing a business case and you say, okay, well, what's the cost to do this? And also, what is the cost of not doing this?
Yeah.
And that's really it. That's an entire business case right there. Who's affected, what involving, and what is the cost and benefit?
Yeah. How would you say this is kind of influenced? Now, also, we'd love to kind of hear a little bit more about the inspiration behind NVAL, but how has that experience kind of translated over into an industry that's a little bit nuanced and a little bit more challenging in terms of not having as much historical evidence in why financial institutions or individuals or companies should go with a new kind of disruptive technology like NFTs and blockchain and everything around that?
Yeah, the terminology we used in crypto seems to be first principles, right? They laid it down to what is the first principle here. And that's really about getting to the root of the problem. And the problem, technology proliferates because it solves a problem, whether that's communication, whether that's financial settlement, or whether that's proof of ownership. It solves a problem. And so not losing sight of getting to the root of the problem, so to speak. A good friend of mine once coined the term, and I don't think he was trying to be sort of clever when he did it. He said, fall in love with problems, not with solutions. Because in all of the enterprise world, you first start with the problem and you write up this business case and a loose project plan of, in order to do this is about what it's going to take. And then you go out and find software or technology that's going to solve that problem. So very much separate the two. You start with the problem and then you find out a way to solve that.
Yeah.
As opposed to finding a hammer and running around looking for a nail, right? Which everybody gets caught up doing to some degree because there's this amazing new toy called blockchains and they're fantastic and they do all these cool things, but that doesn't mean they should do a lot of things. So really then, you look for the best tech or solution to a problem. And in some cases, it's not a blockchain. And so really focusing on that step is something that I guess was drilled into me for, 20 years in the enterprise space, because no enterprise is going to spend money on something just because it's cool. It all has to add up to their bottom line, right? It has to work better, faster, cheaper. has to be a return on that effort and money. So,
yeah. And what is the problem that NVal now is solving within the market of NFTs in particular?
Yeah, sure. So anywhere, and I'll use the most generic term, market. In any market, the value of the assets in that market is just a fundamental data point. In real estate, you can't, you don't buy something unless you know what it should be worth. And then you decide what to pay for it and you buy it.
Yeah.
The bank doesn't lend you money against it, collateralized lending, without knowing what is this thing worth in the market. You don't insure it without having an insured value. And so it all is all predicated on recognizing what is this asset worth in the market. And for NFTs, this is a very new market. A lot of it's new assets, new asset types. And we have this unique ability to see most of the transactions and also in real time. And so really what we're solving at NVal is this transparency of the market. What is this asset worth today? What was it worth yesterday, last month, last year? So that at the end of a year, for example, you can do balance sheet accounting. You can do a year end and say, this was our asset. These were our assets at December 31st. Or if I'm considering buying or selling, managing your portfolio, understanding what the market value is of something is just fundamental to everything. And then it gets, more fancy when you get into insurance or derivatives and that sort of thing, but they're all still predicated on this is a fairly foundational data point. So the problem space became that wasn't solved. I went out there and spent 10 months going full degen in DeFi on every blockchain I could, every smart contract I could read and white paper, and used my own assets and the NFT space, and really ran into this problem of there was no way to understand how these markets valued themselves efficiently, right? Like you could become an expert in one space, but you couldn't really do that in real time. And you couldn't do that to the efficiency that machines could do it. And so what I recognized, or at least my thesis, is that the space can't progress to the efficiency or the scale of sort of modern markets that we're familiar with in other areas without these tools in existence. And so again, coming from the financial industry, I've seen them at play, and it was just obvious that, well, we have to build those. So let's go get started.
So it sounds like the incumbent issue was the efficiency of gathering the data and then using that data to then value the NFTs. And where was the deficit? Was it in the reporting of the value? Is it in the gathering of the information? And where do you gather that information to then know in aggregate the overall value of said asset?
Sure. So I like to use analogies for this because it's not as obvious in the crypto space, but gap is really that no two NFTs are the same, right? By definition, but also in that it's very difficult to compare them to each other. So unlike fungible tokens or liquid assets, securities and whatnot, where there's a spot price, there's no spot price for, in traditional world, what we would call illiquids. There's also no spot price for what's probably more common or more closely aligned, which would be bonds or fixed income, but there are very close comparables. And so this is what we do in real estate, right? We look at every house that was sold recently. We look at everything we know about those houses, and we compare it to this one over here that we're now trying to value. And so it's called mark to model. You create a model of how the market behaves, and then you apply it to this asset over here, and you get data point back out. And so the challenge is, while there are challenges on amassing market data, it's really about coming up with that model that says, this is how the market behaves, and therefore here's what we would assign a value to. And it gets even murkier because, or I guess stratified, because every collection behaves differently. So if you go to OpenSea, you'll find thousands of collections out there. And it's not possible to compare Bored Apes to Sandbox Land. I mean, you can, but it's comparing apples to oranges, right? It's comparing real estate to cars. And you're like, well, why would the price of a car have a direct impact on the price or be an indicator of the price of real estate? And so you get this scale problem of you need to compare like assets to do a decent job of determining market value. And these are all very traditional concepts. They just don't. They just haven't been implemented in this space to date. So that's essentially what we do. The hard part is finding comparables and then being able to produce kind of fair market value in real time or historically for all the market actors that need these data points.
And what's the result for if you're able to do this so accurately for those who hold NFTs or those who are looking to hold NFTs? What is going to be, I guess, the positive impact or just the overall impact of understanding the value of your asset? Is it more frequency in trading them? Is it the increase in the values of the assets? Is it just overall maybe knowledge of the space in general, and that knowledge kind of have some cascading effect? What in particular are the benefits of knowing this information and knowing the value of the NFT?
Yeah. So the most obvious one is utility. You hear about DeFi and NFTs, and that can only really happen if you have some kind of value assigned or associated to that NFT. And so that unlocks everything that DeFi does today. And, it's a recreation of collateralized lending, of insurance, of all of the certain derivatives and whatnot that we get in any asset class. And so for that to be possible, and especially for it to run efficiently, this needs to be available. So we've seen peer-to-peer lending marketplaces, in which case they work, but they're not efficient. I wouldn't expect everybody to be able to show up and immediately assign a value to something. Whereas if you do have that sort of market insight, those can operate at a different scale. So that's one big one. And then sort of more, not nuanced, but more philosophically, what you get is more efficient markets. Yeah. So if you look at NFT markets today, there's a few collections that trade very constantly and get high volume. And so they actually have reasonable sort of bid-ask spreads. And then you get a whole bunch of other collections that don't really trade it enough to be able to be really efficient. And if you get to the old world comparison of commodities or real estate, real estate is something where you can tell pretty close what fair market value is on real estate, because we have so much history, we have so much knowledge, and there's so much transaction volume. We're really good at modeling that industry. Yeah. And we really need that ability. And so what that becomes is an efficient market, because all the lenders can figure out how much something's worth. All the insurers can figure out how much something's worth. We have this common agreement within a margin of error of what an asset is worth. And when you have that, now the markets become very efficient, because all of these peripheral things are possible. And we have this agreement on market value. And that's what's coming to the NFT space or NFT backed assets, but it's not there yet. And that's what we're here to help solve.
It's incredible to think about the NFT space, and there's becoming so many different use cases for, having smart contracts. And one person was telling me that they were developing a method of having almost a diploma as pretty much a smart contract and, non-fungible. And how will, I guess, those types of pieces of personal information rather than assets that we purchase, but personal information kind of influence the overall, market that you're keeping track of? Or is it something that's out of touch? What can you incorporate and what can't you incorporate, just as a general curiosity?
Yeah. So anything that you can sell has a quote market. And so something like identity or credentials, those aren't something that we sell. I mean, unless you're Facebook.
Legally.
Is that a ding? But we don't have there's no market for identity. There's no market for credentials. Those are facts and sort of ownership assets that are important, but we don't buy and sell. And so anything that we buy and sell, now we have market data about, as opposed to just history or verification, authentication, and verification kind of stuff. So there's fascinating use cases out there. One of the ones I think I'm the most excited about is authenticity using NFTs. So you look at the deep fakes out there and you're like, how would you verify that a deep fake was not President Biden launching nukes at Russia? And how do you do that globally immediately? And the answer is something like a blockchain, where anybody can verify it immediately and say, this is actually a fake. There's no way that this is real, or that you can verify that it is real. And so, but there's no sale for that. There's no market for that.
Right.
There's demand for it, but you don't sell authenticity.
Yeah.
In that regard. So that's kind of the way I see the space, is we have all of these features that NFTs will get used for, but they're not part of a market per se.
Yeah.
And you get all these other assets where they are something that you buy, sell, trade, and have a monetary value of some sort. And so anything in that, fair game.
Yeah.
We work with much of it as we can.
Yeah. It's incredible to think about the space and its evolution, but tell us a little bit more about NVal. Where is the product currently at? Do you have user data, and what is getting you excited about the building and the evolution of the product that you're building now?
Sure. So we started August last year. We're just over a year and a half old, I guess, or almost a year and a half old. And we have an MVP live. We are a B2B platform. So we don't intend to produce anything in any one vertical. We're not going to get into lending. We're not going to get into insurance or a marketplace or that sort of thing. And if you go to, again, traditional markets, there's principles built into regulated markets, which say, if you're the entity that provides market data, you can't also be the entity that's selling everything. And so this is why Bloomberg doesn't run the New York Stock Exchange. And they both have to exist for them to both be efficient, right? And so we really see ourselves as the third-party neutral, market neutral fact provider that enables all of these markets. So we're working with platforms that in some cases are marketplaces that want to provide data to their customers to just improve the customer experience. And then we're also working with accounting platforms, again, that if you need to do a balance of your assets, there's only a few sort of GAAP approved methods. And right now it seems kind of like most people have to default to cost basis, which is what you bought it for, which you can imagine. I mean, these things move, right? They move up and down. So in some cases you may look really good, and in some cases it's not the most accurate representation. So we are working with some accounting platforms. We are fairly early stage as far as that goes. We are just pre-revenue. We do expect our first customers to be live and paying kind of in Q2 of 2023. And so, I'm really excited to build in parallel with these customers, because it isn't really a known space yet. It's not a commodity where, oh, I know how to get this data point and I know exactly what it does, and therefore everybody has products for it already or that need it already. And so all of our customers are really building products with us. That weren't possible until they had this data point. And so again, that's accounting platforms. We're also working with a broker-dealer platform or wealth manager platform, and they're scheduled to go live with one of their major partners to the tune of, a few 100,000 wealth managers that they need regulated data. They need regulated reporting for their customers. And that's, it's just not available out there. So we're getting to the point where things are heating up fast. It's a fun market to be in right now, given everything burned to the ground recently. But what we have found is that because we work with the regulated actors in the space, they really shine through.
Yeah.
One of our partners, when FTX was the headline news and everybody thought that things were such a scam or that there was so many problems in the space, they said, we've been getting inbound investment calls because they recognize that well-regulated, well-established, credible actors, holy smokes, they really stand out now.
Yeah.
And lucky for us, that was our space anyway, and that was our customer base anyway. So here's hoping, but things have slowed for sure.
What are some of the biggest challenges outside of this, the global market that NVal faces today?
I think the composition of these markets and what they're going to look like as more, not even traditional asset classes, but existing asset classes start to move in. So, music is a $1 trillion industry globally. How they're going to leverage this technology is unclear, and what it's going to do to the composition of the space. So from a business perspective, that's a risk for us because it's unknown. I guess it's less of a risk and more of an unknown. That how will we fit into that to support that space? Same would go with gaming. As regulated industries or assets start to come into the space, the same kind of things pop up, right? There are incumbents. They don't necessarily work with this stuff. How will this get built out? Just a lot of unknowns would be our biggest risks.
Yeah.
And outside of kind of our core tech, more about just the evolution of the space itself.
Yeah. If everything goes well, what's the long-term vision for NVal?
my long-term vision is that NFTs are the future of ownership. How that's going to manifest is anybody's guess, which kind of leads me back to the unknowns in the space. But what that means for us is that every market, every asset space needs transparency. Need to be able to see in every actor in that space needs to be able to see how the market's behaving and how it's doing. And we really have the goal, the expectation to be part of that solution, to be a platform that doesn't really care what asset class it is, as long as we can provide that transparency. So we expect to support regulated side accountants, they're not technically regulated per se, but they have expectations of data and transparency and their sources of data. And that's a high bar. And that's really our vision, is to be able to support that space. And I'll just add one piece to that. Until these products exist, until these tools exist, the real valuable assets can't really leverage this technology or move into these public blockchains. You're not going to see music show up if they don't have confidence that their royalties will be respected, for example. Because they're like, well, why we don't need to do this? And so part of that is to provide tools that they recognize in markets that we've had for years. And so we really see ourselves as that stepping stone for them and that enabler to the space. That was a long-winded answer.
It's incredible to see about the impact that just the information and knowing where the value is of an asset at a given time. It just has compounding effects towards its value over time. Because without that assurance, then it's just kind of, for show. And it's not anything that can necessarily have a positive effect if you hold it. It's kind of just like, oh, here's a fun token that I might have, but it doesn't really offer me anything versus, I think things that have a lot of validity over time are things that have value that increase or that you can at least measure. So where it lands or where it stands at any point in time. What in particular, what in particular is difficult about your job now? I mean, you ran a consulting businesses, you've worked with these institutions and these companies, but now this new product in particular is a new challenge that you face. And what is particularly hard about your job?
I mean, it's dubbed as product market fit, but at the same time, when I go back to my previous life, I guess it was a whole life, it was a whole lifetime work.
20 years.
It's coming up with requirements. That is product market fit. And so it's just a difference on the same theme. And so, my biggest challenges or unknowns, again, are really about the shifting landscape or the shifting part of the ecosystem. If I was building an enterprise product that was in something that was, maybe it was 10 times better, but it was in the CRM space, that's fairly well-known, less shifting, less changing space. Also way less exciting, frankly. And so, it's just that things move very quickly. Obviously, the capital landscape is pretty challenging right now. That's thanks to, some pretty major collapses last year. But it does let those of us that have sound business models and business practices and tech hopefully survive and really carry through where the real value is created and not the hype. One of the ways I look at this space is, I like analogies because these are sometimes hard concepts to work through, but we have all this infrastructure in blockchains. And for all of these existing asset classes to move in, we have to build more infrastructure that they recognize and they use. And so the analogy I like to use is, we didn't build the Autobahn when we had the Model T Ford, and we also didn't build the Ferrari before we had, interstates, right? Like they had to move in parallel. We had to just keep building better. And the next thing you know, oh, wow, we have the Ferrari on the Autobahn. And so we're really one half to that equation. And I expect that the size of this space seems big to those of us in it sometimes. And it is so minuscule. The amount of value that was created in NFTs in just a few years from scratch is staggering. It is impressive. It's amazing. And it's a drop in the bucket compared to all these assets that already exist that can use this technology. I'll use music as well. All that music already exists. It has trillions of dollars of value, and they can just snap their fingers and, oh, look, now we're using, NFTs and blockchain, even a tiny fraction of that, but
Yeah.
that will look so much faster than anything we've felt in the space so far. And that's been a lot.
It's so fascinating. And I guess one thing that is so curious, because, my company, we don't build in blockchain technology, but what is particularly difficult about, for those who don't know or don't have products in blockchain, what's hard about building? Is it finding people who have the technology skill set, the technological skill set to build, or is it the tools or the updates of different languages that can be used to build certain assets? Like, what in particular is hard about building in blockchain right now?
I think the Achilles heel really is the number of developers that know how to work directly with blockchains and the Solidity languages, the Rust languages, and those native base layers. What we are getting to very quickly is that gets abstracted one level out. And so then, any really good developer now can just tie onto an API and use interface with the blockchain itself. And so again, these are those compounding technologies that are solving these problems for us. But there's not enough in the entire world people who know how to write stable, secure, scalable smart contracts. And part of that is because blockchains in general, settlement layers, that's not something that we have a lot of in this world. Settlement layers are very back-end technology, just like the Swift network. Nobody interacts with the Swift network. Banks interact with the Swift network. And all of a sudden we now have, anybody can interact with the blockchain. And you're like, wow, but should they?
Right. Yeah.
I think that should get abstracted away just a little bit more. And as soon as we do that, a lot of these challenges that these early companies, and we're no exception, have is mitigated. It decreases very quickly. So
yeah, I think we could talk about the future of NFT, the blockchain, for hours on end. And it's so exciting to hear your kind of experience currently, because, from now until when, a couple of years down the line, I'm sure the landscape will be so different. So it's really cool to hear in a drop of time where things are currently at, and how the impact of your experience within the traditional finance markets has kind of created, I think, and it sounds like will create a really regulated and mature technology, which is going to be exciting to see how it can impact other industries as well. I always like to ask this next question for not only my audience, but for selfish research purposes. What books or people have influenced you the most, whether it was early in your career or now?
This is interesting, and it's probably not going to be what you were expecting, but two of the books that are still stick with me after years and years and years. One is South by Robert Shackleton. So this is the expedition to try to get to the South Pole by the British, and he never made landfall. It took him over a year, almost died for years on end, or for months on end. It's just this harrowing story and account, because they survived it, of survival. And the reason that it's so impactful, and it still applies in business, I think, is to really put in perspective, to give you some humility. Be like, nature doesn't mess around. The market, the world doesn't mess around. No matter how right you think you are, you will be proven one way or the other. And the second book, it's an account about finding the Northwest Passage, and it's called The Man Who Ate His Boots. So the Franklin expedition is something we in Canada know very much about, because it happened through, the Northwest Passage. And it's the same type of tale, except it didn't end well. He did die. So did his whole crew. He was terrible. But the lesson of humility in that, at least what I took from it, there's people who have lived up there for centuries with no modern technology, and they were fine.
Yeah.
They couldn't, and the British showed up and said, no, we know better. And they all died. It was like, no better, maybe have humility, look around, learn some. And so, those two, they always come back to it. For some reason, those lessons just are so universal.
Yeah.
And they're entertaining books to read. I mean, at least I found them entertaining.
Yeah. I mean, it's very much in line with what you're doing now, right? It's a new expedition, but based on, for principles that have been around for forever, at least within, the financial institution. So let's hope you don't eat your boots at the end of the day, and and you can still continue growing and scaling. But I know we're at the end of the episode, and I always like to give my guests a chance to give us your plugs. Where can we find you? Where can we be a part of NVal, not only the journey, but if I'm a prospective customer, where can I get in touch with you or in touch with the product?
Sure. So anybody can find me on Twitter. It's first name, last name, Layne Nadeau. convenience of having a more unique name that's harder to spell. Hopefully they can pick that up. nval.com. You can reach out to us directly there. You can see everything we're doing. Anything, you can send me an email directly, layne@nval.com. The experience with new customers and exploring this space, particularly in B2B and infrastructure, is not a click and buy kind of experience. And so I really relish speaking to projects in the space, speaking to people building that understand the need or the gap or the pain point, or don't understand it, but just have that pain point. And so, reach out anytime. Love to talk about any of this stuff, as you probably noticed.
Well, Layne, I so much appreciate, you being on the show and giving not only your traditional kind of experience, but also how it translates to NVAL and also the current market and where it's going to go. So I hope you enjoyed yourself, and thanks again for being on the Behind Company Lines podcast.
This is a pleasure. Thanks for having me.
Of course.